I regard Alibaba as one of the worst mistakes I ever made.
So every time Munger speaks, the media will be all over him because he puts the C in controversial, if you get what I mean. So this time, it's no different. Come to think of it, at 99 years of age, Charlie Munger is still as tenacious and aggressive as ever. So there was a broad range of topics that were covered during the Daily Journal shareholder meeting just some time back. From crypto being crap to BYD being better than Tesla, and of course, Alibaba being one of his biggest investing mistake of his time. So let's cut to the chase. Alibaba is still by far the biggest position in my personal portfolio, and I still remain a huge bull. And to keep this discussion productive, I'm just going to outline my own interpretation of Charlie Munger's thought process and probably the framework when he made that comment. So I will try not to inject my own opinion or even my own commentary in this entirety of the video itself. So there will probably be a follow-up video on my honest thoughts about Charlie Munger's comment. But let's just keep this video clean. So remember to stay subscribed and hit that cute little like button. Now, I just wanted to make sure that you have all the tools needed to study the market at your disposal. Currently, we are in the earnings season. Many companies are reporting earnings left and right. And with MooMoo, you can easily keep track of your favorite company's earnings. Here's how. Log into your account via the MooMoo app, go to Markets, Earnings Reports, and you'll be able to keep track of the entire earnings calendar in the upcoming weeks or so. So if you would like to learn more, you can tap onto the specific companies that you're interested in, click into Financials, and you'll be able to see a breakdown of the recent results, call transcript, and even opinions from fellow investors on their innate MooMoo platform. So for those of you who have yet to sign up for a MooMoo SG account, I don't know what you're waiting for. So you can use my link in the pinned comment down below. On top of that, if you subscribe $100 into MooMoo Cash Plus account, you can get $20 worth of cashback, $2 for 10 days straight. Besides that, you can also deposit at least 2,700 Singapore dollars to receive up to a free Apple share. So don't let this sweet deal get away so easily. So for my US and Australian viewers, MooMoo is also running aggressive reward campaigns, giving out free stocks as well. So just make sure you click on the correct link below. So thank you MooMoo for sponsoring this video. Now, let's get back to Charlie Munger. Let's first see what he has said during the shareholders meeting.
Another question comes in from Brandon McKee. He's also asking about some of the situations with Alibaba. He said, how should investors view geopolitical events in regards to their investment in foreign countries? How do you look at the situation of the recent Chinese spy balloon in regards to the Alibaba investment?
Well, of course, it was a very interesting thing. Jack Ma was a dominant capitalist in Alibaba. And one day he got up and made a public speech where he basically said the Communist Party is full of malarkey. They don't know their ass from their elbow. They're no damn good, and I'm smart. And of course, the Communist Party didn't particularly like his speech. And pretty soon he just sort of disappeared from view for months on end. And now he's out of BYD. It was pretty stupid. It's like poking a bear in the nose with a sharp stick. It's not smart. And Jack Ma got way out of line by popping off the way he did to the Chinese government. And of course it hurt Alibaba. But I regard Alibaba as one of the worst mistakes I ever made. In thinking about Alibaba, I got charmed with the idea of their position on the Chinese internet. And I didn't stop to realize they're still a goddamn retailer. It's going to be a competitive business, the internet. It's not going to be a cakewalk for everybody.
So I think it's pretty rejuvenating to hear from one of the investing legends admit to his own mistake, despite being in this trade for more than 60 years now. So like many Alibaba backholders, myself included by the way, we have all come to accept Alibaba as the FANG equivalent of China. So if possible, I would throw in Tencent and friends into the mix as well. That said, I think all these Chinese tech companies all pretty much lie on a spectrum. So the emphasis here that was pointed out by Charlie Munger was how you evaluate the business economics of Alibaba at the end of the day. On one end, if it's closer to a retailing business, it's going to be hell of competitive. And we've clearly seen how Alibaba is bucking under pressure over the last 2 years. So numbers from their financial reports don't lie. On the other hand, you also cannot simply just write off the internet aspect of all these different tech companies, which spawn out many other business verticals like Ant Financials, AliCloud, Cainiao, etc. And some of you might call it's essentially a kind of business that spawn other businesses. So depending on where you see Alibaba on this business spectrum as an investor, you will then ascribe the relevant multiples you are willing to pay for the business itself. If it's a retail business, it's a much lower multiple. So Munger has then also subsequently realized that not only is the retail business competitive, the internet part of the business is equally tough, if not even tougher to compete. So in this regard, Munger admitted that he was charmed by Alibaba's dominant position in the Chinese internet market, which also had him overestimating the future returns from Alibaba. So I think the bigger lesson here is not necessarily whether Alibaba was a mistake or not. It's really the idea of whether you are able to accurately grasp the value of the underlying business. And in this case, Munger has conceded that he has made the wrong assessment, which explains the biggest mistake comment that is made in the shareholders meeting. So here comes the interesting part. Based on Daily Journal's Q4 filing last year, Alibaba still take up 15.2% of the portfolio. So it might have been the case that Munger has already sold the Alibaba position prior to the meeting, or he might still be holding on. Who knows? Time will tell. But if Munger has clearly admitted to his mistake, but continue to hold on to this Alibaba position, what does this tell you as a bystander? Sunk cost fallacy? He doesn't believe what he has said? Or whether he still thinks that there is still value in today's price, but his entry might have been a little bit too early and a little bit too heavy due to the wrong assessment of future cash flows. So just some food for thought. Now, the second part of his comments.
Political events in China over the last few months affected your thinking on the country. Several people, including me, were taken aback by the forceful withdrawal of former President Hu Jintao at the October 22 annual Congress. President Xi seems to have consolidated power, and his actions have indicated that he thinks very differently about the role of business in Chinese society.
Well, I have more optimism about the leader of the Chinese party than most people do. He's done a lot right too, and you know, he led a big anti-corruption drive. He's done a lot of things right. So, and I don't know where this man lives. Where is there a place where the government is perfect in the world of sin and sorrow? The democracies aren't that brilliantly run either. So it's natural to have some decisions made by government that don't work well. It's natural to have decisions in each individual life that don't work very well.
So I think it's quite clear that Munger still remains optimistic and upbeat around China and the Chinese government in totality, contrary to the mainstream views in the public today. So I'm in the same camp as Munger, in case you haven't realized. So I think in terms of pricing securities specifically, the market have been largely efficient in trying to price in the risk of these many Chinese equities. So your job as an investor is to take on the level and category of risk you are comfortable with. So if you're to combine both his comments, it seems to me that he still has a relatively keen interest to stay invested in Chinese equities, but have probably regretted the valuations when he first bought the stock. So last but not least, he talks about the tension between China and Taiwan.
It's coming in from Walnut Creek, California, who just said previously you stated that despite certain shortcomings, China was generally moving in the right direction. However, with the recent actions taken by the Chinese government, such as capriciously punishing technology and educational companies, declining to import effective COVID vaccines, escalating threats towards Taiwan, do you still maintain that China is a viable investment option for foreign capital, or is China experiencing a similar regression as Russia has seen under Putin's leadership that culminates in the invasion of Taiwan?
Well, that's a very good question, of course, but I would argue that the chances in a big confrontation from China have gone down, not up, because of what happened in the Ukraine. I think that the Chinese leader is a very smart, practical person. And it doesn't, Russia went into the Ukraine because it looked like a cakewalk. I don't think Taiwan looks like such a cakewalk anymore. I think it's off the table in China for a long, long time. And I think that helps the prospects of investors who invest in China. And the other thing that helps in terms of the China prospects are that you can buy better, stronger companies at a cheaper valuation in China than you can in the United States. So you're getting the extra risk can be worth running given the extra value you get. That's why we're in China. It isn't like we prefer being in some foreign country. Of course, I'd rather be in Los Angeles right next to my house. It'd be more convenient. But I can't find that many investments, right next to my house.
So I think this point is pretty self-explanatory. If you fundamentally believe that there is an impending invasion around the corner, it would be pretty hilarious if you still allocate capital to these Chinese equities, considering whatever transpired between Russia and the Western Bloc, which didn't turn out too pretty. So I don't think any event of this magnitude will happen anytime soon. I could be wrong, and if the facts change, I would change my opinion. If not, do leave in the comment section down below on how you view Munger's investment mistake. So with that, I'll see you in the next video, but more importantly, I will see you on the moon. Goodbye!